This right here, this is the stuff that gold is made for.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June.
Powell now is under official criminal investigation, and it's obviously a political maneuver from Trump to push for lower interest rates. Now, if you follow us regularly, you know that we've been bullish on gold for all this move, for all this macro move, for quite a while, targeting 4,900. And this right here, this is the macro story unfolding in front of your eyes. See, when the Federal Reserve independence is at stake, gold becomes a debasement trade, the kind of safe havens that shields investors from the risk that come with potentially high inflation and low interest rates, which is a large devaluation of the domestic currency because real yields drop and the purchasing power of the dollar gets eroded. Now, most of the people think gold is an inflation hedge, and it is, but that's the surface level definition because gold is actually a currency debasement trade. Inflation is just one way that debasement shows up. See, gold cares about real yields, and real yields are what you earn after netting inflation from the interest rate, from bonds, from the treasury market. So here's how it works. If political pressure pushes for lower interest rates, which Trump is doing and it's going to continue to do, while inflation risks stay elevated, Federal Reserve has an inflation target of 2%. Right now, we're around 2.7. It's been a little bit distorted by the shutdown. It's probably more like 2.9% inflation. So lower interest rates, inflation is somewhat elevated, real yields fall. And when real yields fall, the dollar loses its value and gold appreciates. Now, I don't want to bore you with a theory in this video. I've talked about it quite extensively already. What I want you to notice is how the macro story unfolds. This thesis which I've taught you about, has been building for months. And our task as traders is to analyze at what phase of the story we are in. Is it just getting started? Are we in the middle? Is it near the end? We do that to understand whether the trend is likely to continue ahead or not. Let me be precise. What we ask ourselves is this fundamental story, sentiment, current driving the trend, which I've explained to you, the Federal Reserve independence at stake, likely going to continue or not ahead? If it's yes, then we ride the trend. If it's a no, obviously we look to fade the trend, okay? So we understand why the fundamental story, why the trend is actually going on, the fundamental story that is driving the trend, and then we analyze whether that story is actually going to continue or actually it's starting to fade, it's exhausting. Because remember, this is the most important part, the trend is the story, okay? The trend you see on the chart is the reflection of the underlying narrative, the story that is actually moving price. In gold's case, it includes a lot of things. It includes the Fed independence at stake, it includes geopolitics, it includes massive central bank demand. There are multiple macro forces all pushing in the same direction. So the question we need to ask is simple. Is the Fed independence story, is the central bank demand, is the geopolitical context almost done? Or does it still have room to go? And honestly, the answer here is pretty obvious, and it's been obvious for quite a while. The story hasn't even started yet. We haven't even seen a new Fed chair yet. Rates haven't even been cut meaningfully yet. And this pressure is only going to intensify as the years goes on. Not even to mention geopolitics, because you've seen how things are developing. Trump is not afraid to do what he needs to do. Venezuela, Iran, all of it. So think about this, as the new Fed chair gets appointed, rates are gonna start getting lowered regardless of what inflation does. And see, understand what we just did here? By answering one simple question, we built the entire macro view for the asset. We know this asset, we know gold is most likely going to keep trending higher. And how do we know? Because we understand what is it pushing it right now. And by understanding that story, we can evaluate whether that story is likely to continue or not. We understand that the story about interest rates going lower hasn't even started yet. This year, interest rates are going to get brought lower because Trump will do what he needs to do to get interest rates lower. And so we can see that the story isn't fading anytime soon, and so the view is set. This is fundamental analysis. Now, one important thing before the video ends, macro doesn't pay you for being right every single day, it pays you for being right at the right time. These moves don't play every single day. They play out in phases, price moves, it pulls back a little bit, it consolidates, pulls back, moves, and then moves again. This whole thing is designed to frustrate the weak hands. They get frustrated into this consolidation and then they miss the move. They get stopped out into this pullback and then they miss the move. Do you understand what I'm saying here? Fundamentals for direction, technicals for timing. This is how it's done. We understand where things are most likely going to trend to, and then we look for triggers to take action in that direction. Like we did a week ago with the break of the neckline on gold on this inverse and then showed it right here. Or like we did a couple of days ago with the private network, with the break of this resistance trend line. If you understand this combination between fundamental direction and technical triggers, you'll do great.